The world of international payments is changing. New technologies, new players, new expectations. What does the future hold?
Ladies and gentlemen, please welcome on stage our moderator, Alison Tudor-Ackroyd, and the panellists for this afternoon's Big Issue debate.
So, payments are now possible without banks. DBS's CEO, Piyush Gupta, has warned that banks could become the dumb pipes of finance unless they act fast. Fintechs can now make hundreds of thousands of payments per second. But with speed comes insecurity. How to hit the right balance? We have here to debate the future of cross-border payments. On my left, Philippe Henry of HSBC, Jennifer Boussuge at Bank of America. On my right, Clara of Ant Financial, and Molly Shea of Western Union. And I'm Alison of Corporate Treasurer and FinanceAsia. We'd like to make this interactive with you, so there will be live polls during the session. Please do go to www.sli.do/SIBOS. We'll be using the URL instead of the app during this session. There will also be some time for your questions. Please do submit them, and we'll try to address them towards the end of the session. So let's get started. So turning to Philippe first, please. How would you encapsulate the thinking towards cross-border payments, and how has it evolved?
Thank you, Alison. It's a pleasure to be here this afternoon. So I think short answer is move from payments as a product to payments as a service. And to a certain extent, I will say, move from banking as a sum of product to banking as a service. We have to admit, and we all know, that the movement of goods and money is becoming simpler, faster, safer. It is part of the digital transition that we all know. We don't need to speak that much about that. But what is clear is it has an impact also on the clients. So very much, instead of considering the payment as a product, we need to look at the client, and we need to understand what is happening today in their world. They all have to face, whether they are retailers, whether they are luxury groups, whether they are industrials, whether they are insurers, whether they are in the pharmaceutical sector, they all have to face the consequences of the fourth industrial revolution. So they have to change their business model. Sometimes it is difficult to follow, I have to say, as a bank, because we have a model that traditionally is organized sector by sector. And in reality, you have a number of the clients now that they start talking to each other. A car maker talking to an insurer, talking to a central government to try to set up a new ecosystem. Okay? So what does that mean? That means that the clients are revisiting the way they work. They are revisiting the way they cooperate with their suppliers, with their own clients. If we understand that, then we can come and offer more tailor-made services. Payments is a part of that, but is not only in the center.
Jennifer, if I can turn to you, cross-border payments exceeded $200 billion globally in 2017. A nice, healthy $45 a transaction, according to latest stats from McKinsey. But surely competition is going to decimate this. Do you see it staying at the same levels or going up, down?
So the trend that we're seeing right now in cross-border payments is a large number of low-value payments. So actually we're seeing a tremendous amount of volume, but in the lower payment amounts. And think, the things that we see driving that, think about the gig economy, so the Ubers, or think about the sharing economy, so think about the Airbnbs, and the amount of volume that they're pumping through the system is huge. But these are small value payments, and so given that, they start to look at, well, what are the means of which we want to send those payments? Because they're looking for the most cost-effective route. So that's where we start to see the focus of, instead of necessarily choosing wire transfers as a desired option, is looking for more lower-cost cross-border options and cross-currency options to come through. So we don't necessarily think that that means less revenues for the industry overall, but a change in the makeup. And in fact, if I can quote, there was some research published by Accenture just recently, whereby they say that they expect the overall value of cross-border payment volumes actually to rise by 5.6% per year through the year 2022. So I guess we're safe until then. So we'll see what happens.
Thank you. Clara, so you're the enemy of the banks. You are going to, with your very slick high-tech solutions, going to eat their lunch, is it? Is that the future?
No, of course not. And honestly, we are bringing, the unbanked population to the system. So we provide the financial inclusive services to the customers. So, if you look at, the markets, we set up a local wallet business. We always look at the unbanked, population, the percentage. So today we actually have 9 wallets, and most recently we invested in bKash in Bangladesh and EasyPasa in Pakistan. So the second is actually, when we grow the local business, we always, work with the local partners. So, for example, like, Touch and Go in Malaysia, we actually work with CIMB. We partner with CIMB.
Malaysian bank.
Yes, that's the second largest Malaysian bank. So, and of course, other than the wallet business, we also work with banks very closely on many fronts. So on the stage, actually today, say BOA, HSBC, and Western Union, we actually work with them all. So I think it's more a collaborative, relationships instead of, an enemy to the banks. Yeah.
Fair enough. Molly, Western Union's digital services segment is growing at a really quite healthy clip at about 20% a quarter. Yeah. We're talking about strategies for growth here. What's driving that?
It's really been about investing in our digital transformation. It's really been 18 years since we launched and did our first transaction online, and 11 years since we sent the very first cross-border money remittance into a wallet. So we've been in this business for a long time. We were the original disruptor, I guess, to the banks. We've been around for 165 years. So it's always about transforming. We've been playing in the digital space now for some time, and we know what the customers are looking for. Our digital revenue from that side of the business is over $400 million, and like you said, growing 20% annually. And 70% of our transactions are actually started on a mobile device. So we're really bridging. We're bridging the physical and the digital, and making sure that we can send to over 200 countries and territories from a mobile app, from the web, and then also that you can pick up via cash, via wallet, via bank account, to over 3 billion bank accounts across the world. So it's really about being relevant in all the markets that you serve.
Yeah. I heard somewhere that you'd got to 45 countries that are digital, fully digital. Are you opening up any more? What's the pace?
Yeah, no, we're actually, by 2020, we definitely want to be in every country around the globe. We serve today 200 countries and territories, and we hope to be in all of those. Just in the APAC region alone, I've launched, my team has actually launched about 7 in the last month.
Oh, wow.
So we're accelerating that pace right now, especially here in Asia. So it's an exciting time.
Clara, back to you. Retail cross-border e-commerce sales are poised to exceed $900 billion by 2020. However, what I understand is that much of the C2B market is really tricky for the consumer. It's quite complex. So how can banks establish a seamless experience for those customers?
Okay, actually, Alibaba group mission is to make it easy to do business anywhere. So we not only support the infrastructure of commerce, but also, serves the consumers and the enterprises, most of which are actually small business merchants. So, say today Alibaba sells to 200 plus countries and provides the back-end payment services. So it's actually a big task for us. And shopping, it's always like irrational, behavior. So a smooth, payments process will give the consumers no time to have a second thought. So it's a buy. So it's very important, for the success of our e-commerce business. So we look for, the best-in-class, payment solutions in every market. We work very closely with banks, acquirers, and the APMs. So when we select the partners, we always look at, say, the coverage, the success rates, and the cost as the key, KPIs. So it's very important. Payment service.
Of course.
Yeah.
Yes, yeah. Well, the pursuit of growth is often fraught with pitfalls, and we've got the audience vote open now. What do you think are the biggest challenges for the banks as they become digital? Do you think it is competition, regulation, fraud? Please cast your vote and make your voice heard. And whilst you're voting, I'm going to turn to Philippe.
I was watching the result.
The regulatory.
Oh, yeah.
Because
Well, I'm
because
thinking...
I will adapt my answer to
Okay, good. Well, I'm thinking regulation is going to hurt. How is technology impacting the complexity of regulation, and what does that mean for spending on compliance?
So I think this is the flip side of a more open banking world. There is a bit of paradox, I have to say, in the relationship between the banks and the regulators, or between the fintech or the new players and the regulators, because on one hand, a number of regulations are trying to open the market. If you take PSD2 in Europe as an example, I think it's a good idea. On the other hand, once you have been providing added value services to clients using technology like instant payments, automatically the question of the risk management comes. So regulatory risk, cyber risk, operational risk, we have to manage that differently. Of course, it is driving the cost up. Regulators are better and better equipped to assess whether our risk framework in such a technological environment is adapted. If it is not the case, they have a number of tools at their disposal, to ensure we do the right thing, I have to say. And interestingly, one of the answers for us to adapt is also to benefit from the technological revolution. And it is very interesting. I was looking at the recent statistics on where the private equity firms are investing in the tech sector at the moment. In the fintech space, you have to know that there are large investments that are made now in RegTech and cybertech. Yes. So technology is not only utilized to offer added value services to clients, but also to help the bank to improve the way they control or they organize the transaction monitoring.
I think we have a result. A clear winner is legacy systems. If I could turn to you to address this. And you're over 100-year-old bank. How do you how do you, and the spending on legacy systems is what, 80% or something of IT spending at banks now, but how do you address this problem? How can banks address this problem?
Let me be a bit controversial.
Oh, good.
After 30 years experience in the business, I think I have the right to be controversial. Legacy system means also proven technology to some extent. Okay? So my point is that hopefully the new technology, the new languages, the new capability to develop around the legacy system a layer of added value solution via APIs as an example. Just the fact that there is a lot of information into what you call our legacy system that we have never been given back to the clients, and therefore they cannot utilize this information to develop maybe a new business model. The client was not very demanding historically. They just started to be demanding when they have been under the pressure to revisit their business model. So now they want this information. It's understood. If you take a Swift GPI, this is the same logic. How can we, from existing system, extract information that we share with the final user, whoever they are, whether they are banks, intermediaries, or corporates? So my answer and my short answer to you, because it is what it is, but what I can see is now there are solutions that enable us to utilize the information that we have in our systems to share this information with the ecosystem around us. It is getting organized anyway by the new regulation. If you take the PSD2, there are two new roles. One is accounting information service provider, and the other one is payment initiation service provider. And by the way, it is not because those roles have been properly defined by the regulation that the banks don't have the right to play this role. Okay? So we are an actor of this new model, and there are certainly services that we can offer by being a better information provider.
Thank you. Thank you. Jennifer, I'm going to come back to you. Cross-border payments have lagged behind domestic payments in terms of efficiency and innovation and transparency. Has GPI really eased the pain points that banks feel? Yeah.
So, and clients overall, I would say in a short answer, yes, and certainly more to be done. So, if we look at what's happening, we see, consumer advocacy groups, we see the emergence of new technologies, all putting pressure and all creating more of a demand on the part of our corporate clients for greater speed, for certainty, for visibility into costs, and to have that greater transparency. So I would say, so far, yes, GPI has absolutely helped provide a greater level of transparency in the payment space. I think for GPI to be really, for us to feel the full benefits of it, we need to have greater adoption of it across the board. So we need to have that much more wider, and I think we'll see the full benefits. I think coming back to some of your initial comments though, about cross-border payments, I think that there's a fair amount of misconceptions about cross-border payments, and I, to be provocative like my partner here, Philippe, I would say that as you look at it, they're actually fairly efficient. In fact, they're quite efficient, and that's, I think, one of the things we've seen with some of the transparency that we have with GPI is that now that you can actually see the payments going through and the settlement times, what we find is that it's actually GPI is showing that the actual processing and settlement speed, it takes approximately 5 minutes or less for the vast majority of payments to actually be settled. So again, more to be done, and advancements continue to be made, and we need to continue to invest in it. But I think we've seen that we talk about how cumbersome is the process or the cost of becoming a member, and there's absolutely a cost associated with it. But I think what we're finding is that the benefits absolutely outweigh the costs, and in particular for the clients, I look at how clients want to access information and data, as we discussed earlier, and I think this helps get us on that path to self-service, which clients want more because they can have richer, real-time data sets that they can refer back to. So I think we're making progress.
Good. Yeah. Molly, you're based in Singapore.
Yes.
In Southeast Asia at the moment, we're seeing a real hubbub of activity in the payment space. You've got lots of different systems sprouting up, like GrabPay and AirAsia's wallet, and it's exciting times. But I'm wondering, is this a big competitive threat for for you and for others like you? What do you see this? The number of these systems, payment systems, as sustainable?
Yeah, it's very interesting what you see, especially in Southeast Asia, and I think we heard a lot about it this morning. In the last 10 to 15 years, there's been more innovation than the last 100. And there's more computing power in this mobile phone than was needed to send a rocket to the moon by NASA. So we're dealing with new use cases, if you think about when you go order, financial services, you want it as quickly as you get a cup of coffee. When you send a money transfer, you want it as quickly as you send a text, because our customer expectations now are so far advanced. So as companies, we constantly have to be chasing and keeping up. And yes, the fintechs are great at developing the wallet ecosystem, and they are starting to dabble in things. You've got the wallet to wallet that Clara's team has developed. And those will sprout up. I think the beauty of Western Union operating in 200 countries and territories is we've got the expertise and the industry knowledge. When you want to do not only mobile wallets, but you want to do cash, and we pay into 3 billion bank accounts worldwide, and we know the regulations in each and every country that we operate in. So sometimes you see a lot of competition prop up when you've got specific use cases. But I think the real future will be more about collaboration and partnership. Because what the fintechs do well is that customer experience, is knowing what that customer wants in a broader ecosystem, whereas we really know what the customer's needs are for moving money across border.
Mm-hmm. Ant Financial is growing so fast in the pockets of Chinese tourists. I noticed some data saying that in the past Golden Week, you had 2.2 times as many transactions as just the previous year. And that's very swift growth. What's next for Ant in terms of your global...
Yes. So I think the answers to this question will be twofold. And the first one, as we promote the global, digital inclusive finance very aggressively, I have to say, by empowering the local partners. So basically, we empower the JV wallets with the technology and product expertise, and the local partner will bring the customer base and the local market, knowledge. Mm. So as I mentioned, right now we have 9 wallets in Asia Pacific. So that actually provides, provides the local digital payment service to the local users. And additionally, we actually work very closely with the merchants in markets where Chinese people love to go. So, so it's right. As of today, there are 40+ countries, with offline acceptance for Alipay. We want to expand, more quickly to, more markets. And the ultimate goal is, wherever you find an ant, you will find Alipay.
You're taking minority stakes in these
Yeah, we
companies,
do.
aren't you?
Yes.
So, yeah.
So all the 9 wallets, we are actually the minority shareholders. Yeah.
Molly, I'm just thinking, you're in Singapore,
Yes.
and the Monetary Authority of Singapore came out recently and said that large e-wallet providers need a banking license before they make loans. Fair's fair, right? E-wallets should be regulated like banks if they're big. What do you think?
Would definitely agree. I think it would be a great poll, though. We should actually put that one up. No, I think anytime you're talking about loaning money and protecting those assets, I think it's very important that they be regulated.
Philippe, what impact do you think regulators' push towards open banking has had on banks and their clients?
Well, I mean, evidently, the regulators have been willing to push interoperability of the payments ecosystem, lower entry barriers, and also promote cross-border competition. So I think we have been thinking about that, we have understood that, and we have been looking at how can we, by changing slightly our business model, also, as a bank, benefit of this open banking world. So I don't know whether it's a push from the regulators or basically more requirement from our clients, but at the end of the day, we have to think about that. So in reality, if it is all about exchanging information quicker and also enable the clients or the third parties through APIs to utilize information that are in the system, whether they are in the payment systems or whether they are in the banking balance sheet, I think we can also, as a bank, utilize that sort of information to optimize, as an example, our asset and liability management. There is also an element that has never been clear over the past 20 years, is when the payments are accelerating, we have to discuss also the intraday liquidity, not only the end-of-day liquidity, but the intraday liquidity. So when you are obliged to improve your systems, then you have a better internal tools to manage your intraday liquidity, meaning that your interconnection with the clearing system becomes different, meaning that you can also optimize your capital structure, the amount of capital you put in front of your operational risk, as an example. And as you know, operational risk represent probably a good 1/3 of the capital consumption of the banks. So we are in a trend that make us probably more agile also in the way we manage the ALM of the bank.
Jennifer, on the APIization of banks, fintechs can now run on banks' rails, and I'm thinking, who owns the customer in this situation? Who sees the data and offers them the solutions? And also, I wanted to ask you, incremental steps taken towards ISO 20022. Do you see this initiative as promising?
So sure, I'll start with the first one. So on the APIization, so I think we looked at it 2 ways. So if we, as a bank, are looking at developing a solution for our clients and we're partnering with a fintech or a vendor to put forth a solution for a client, in that scenario, we own the data and we're very, very careful to protect our clients' data, and we don't allow that fintech or that vendor access to our clients' data. And we would white label that type of a of a solution. However, we're very open, obviously, PSD2 and so forth. So our clients ultimately are the owners of their information and their data, but it's up to them to choose who they want it to be shared with. So if our individual clients come to us and ask that they want to share, then we will respect those and we will make that information available to the third party of their choice. But again, it absolutely has to be, directed. The customer owns that data. As it relates to ISO 20022, I mean, I think as we look at the uptake and the application of APIs throughout, I think everybody in the industry, agrees that standardization is going to have to be key in order for the take-up of the APIs and for that to work. And so I think given that, certainly ISO 20022 makes perfect sense to get us on that journey.
Are real-time payments causing a big headache for compliance departments? Faster payments means less time to react. How do we deal with this?
So I think banks have been reacting to near real-time payments for quite some time, for years. If we think about, transactions that could fall in that category, near real-time transactions could be an ATM withdrawal. It could be going to a teller window to withdraw cash, domestic wires almost. So I think we, as banks throughout this time, have been working on how do we create the proper analysis up front in order to facilitate, those transactions. And so, if you look at the fraud community, every time a new payment type is launched, they're looking at ways of where they can find the vulnerabilities. And so I think it's important for us, as banks, I think historically the way we fought fraud is to try to slow down the process to make sure that we're able to authenticate and that that this is a valid payment. And so that's going to frustrate this demand out there for that real-time payment because, slowing down that process isn't going to be something that will be palatable to the customers. So this is where I think, analytics, models that we apply, we've talked about, artificial intelligence and so forth, moving so much of that up front in the process as opposed to after the transaction has taken place, and being able to get smarter about patterns, not looking just at the specific transactions, but looking at the client and looking at the behavior. Is this standard with the type of behavior that you've seen with that client? And so really being able to process that data much faster and quicker up front, again, by using AI, by using robotics, by using effective use of models, I think, always continue to hopefully keep us a step ahead of the fraud community.
Ant, I understand, is hit by cyber attacks daily in China. Where are you at on how robust are your systems in China to deal with this?
Yeah, okay. Actually, safety is not the major concern for us for payments because the transactions are very safe thanks to our AI-driven, risk management system. So our, say, fraud loss rate is below 1 in a million.
That's low. That's
yeah,
low.
that means, for every $1 million, the loss is actually $1. So that's very low. That's actually much lower than the credit cards or debit cards, for banks in China. Their estimated, fraud loss rate is around, 2 basis points. So, and not to mention, bear in mind that, the overall, say, fraud rate in China is actually low compared to the rest of the world. Yeah.
That's true. Molly, I was thinking the largest sender markets are likely to transition to digital faster. The US, UK, Saudi Arabia. As that happens, what do you think are going to be the segments that remain lucrative for longer?
So I think when you think about our larger send markets, we still have quite strong growth in those markets because we continue to evolve with the customers. We continue to look for other use cases. As an example, we just announced in the UK that we've increased and we've developed a product whereby you can send up to £50,000 a day, 24/7, to over 200 countries and territories, et cetera. So what we've done is just like Western Union, we've been around for 165 years. It's all about understanding the development of those markets and the needs. Banks, they definitely provide that service today, but when you look at Western Union and our ability to do that, and the ability to send it into 3 billion bank accounts almost instantly, is just expanding our use cases and providing another service for these key send markets that have kind of been limited today in their ability to do that. So as I think about the digital space, it's really allowing us to grow the pie within which we operate and develop new products and services for the next generation.
Cool. Philippe, on the one hand, clients want open systems, open banking. But on the other, they certainly don't want to be hacked. How do you balance these expectations?
This is our difficult day-to-day job. My answer is very simple. I think we have invested, the last 2 years, $2.3 billion in improving our end-to-end systems. Of course, to make those systems, to redesign, let's say, the customer journey, and we improve the end-to-end, that's very, very, very clear. But the second reason is when you start offering a more open access to our core system, transaction system that is called HSBC Net, as an example, by developing added value mobile app around HSBC Net, live in 42 countries. It is evident that you need to ensure that you have associated to those developments proper, as an example, biometric security features, including Touch ID, Face ID, etc., etc. Because otherwise it doesn't work. So this is very much the answer. A large part of the capex that we spend are not only there to improve the end-to-end from a customer standpoint, but also to improve the security.
Jennifer, in the digital age, how do you see client service evolving?
For the better. I think if we look at traditionally how clients have interacted or interfaced with the banks, it's been through phone, it's been through email channels, and I think that with digital transformation, with intelligent automation, it's going to really empower and allow clients to be able to be service and interact with their banks how they want, when they want, where they want it. And I think that that's really, really critical for us. So, if you look, again, as I mentioned, you look at the traditional channels. I use an example with email. Right now, today, when clients send their banks emails, at least, you're opening it, you're reading it, you're trying to establish what is the client trying to, what's their query, what do they want, and then that has to be cased in the system, recorded, and then sent off to the proper place. With intelligent automation, with artificial intelligence, now a machine can actually open up that email, can read it, can quickly decide what is the client trying to find out, and then they can either answer the question if it's just a balanced query or they want statements or something like that. The machine can actually fulfill that request, send it out to the client immediately, or if it's more complex, it can at least direct it to the right place. And so that will really speed up the time. We talk about this idea of fast, right, and rewarding, be able to reply to clients much faster, get it right, and then have it be a more rewarding experience, because the associates who used to be involved in some of the mundane tasks ideally have more time freed up to spend time with clients, talking through, again, more complex needs. The other piece, I think, really is around the digitization. We think about how much paper we exchange back and forth still today. And I think now you're going to see much greater digitization of documentation available. Most banks have portals, so the ability for clients to actually be able to be authenticated and sign on via a portal, really download those documents that are required, be able to e-sign them on that portal, upload what's needed, and for that then to feed into a back end of a workflow type tool where the clients, the bankers, everyone can work on there, and you've got that transparency and that visibility of what's happening, at any point in time when you're working on the implementation of a particular service or product. So I think that's the evolution. That's what we're seeing. We're seeing it already today. I think it will increase. The challenge that we'll have is not the technology, but it's the laws, rules, and regs that we talked about earlier. It's what countries will that be allowed. And I think as we try to roll out these global solutions, that's where we really need some of the local governments to stay pace with us, because there are certain countries that still insist on the paper. They want that physical wet signature, and they want it certified by somebody. So I think again, the technology will be there, the client experience will be absolutely better, but we've got to make sure that the regulations keep up with it.
Thank you.
Yeah.
Yes, just an anecdote on that side. Recently, we were working on two systems, developing a CRM system for our senior banker and also developing a system for our client. And what we did is we asked our own millennials, to test the system. Because at the end of the day, this new generation of colleagues, they have their specificism. They are very clever, they are very well educated, but there is one point, they are not patient.
Not patient, no.
They are not patient at all. And therefore, we know very much that on the client side, the same generation will not going to spend time on the phone to call a senior banker or a salesperson if there is something that doesn't work or a batch of payments have not been made or whatever. They want to go in the system to understand what has happened and when the payment will be made good value. Okay? They don't want to have any contact with anybody, maybe a robot eventually, but fundamentally they want to see in our operating system. That's why the APIs are very important, because they want to penetrate in our system to get the information they want so that they could go to the next step or to work on something else. So in the design of the tools that we have today, we are always to think about this new generation of users and always thinking that they will be less patient than my generation.
If I could just add one thing to that, the other thing I meant to mention is the chatbot technology, because we're seeing that a lot, in people's lives. You look at the Alexa and Siri and so forth. So that's another thing. I think the younger generation, people are they just want to ask the question of something and an answer come back. So I think you'll see more and more chatbot technology come out, and I think you'll see it morph over. You're already seeing it in the consumer space, but I think you'll see more of that application happening in the wholesale and the corporate space, and eventually in portals and so forth. Yeah.
I want to actually bring in, when we're talking about technology, I want to bring in blockchain. Is blockchain a dirty word in banking? Is it out of the lab at the moment now with HSBC? Is it?
Well, I'm not sure it's a dirty word, but blockchain, there are many types of blockchain. And also, we need to think about what sort of utilization we want to make from the blockchain. I think the mistake or the misunderstanding has been that the first blockchain technology has been utilized in the context of the development of cryptocurrencies. So I will adopt a completely different approach. I am very interested also as an engineer in all the development you can see around private blockchain. And why? Simply because when you have the actors around the blockchain that knows each other, that have been properly KYC'd at the beginning, a community, let's take a community of banks involved in the same clearing systems. Then you can start thinking about using blockchain to simplify your processes. So the big and the mega utilization of the blockchain, and that is the part of the blockchain that is moving very quickly from POC, proof of concept, into real utilization. Scalability of the technology is around security services, clearings, payment to some extent, as long as it is under the control of a community that has been properly KYC'd at the beginning, as I said. There are huge utilization. I'll give you one example. In the trade finance side, we did recently, it was more than a POC, it was a real transaction for a client of us, for Cargill. We cleared a trade transaction for Cargill that was including not only two banks, not only the clients, but also freight forwarder, shipping company, customs, transporters. Normally, for such a transaction, it takes 5 days to clear. We have been able to clear it in 1 day, and more importantly, by using the blockchain technology and also the smart contracts that are attached to the blockchain technology that enable to automatize a certain number of tasks. The way we have shared the information across this community of companies all working on the same transactions has enabled us to clear the deal in 1 day. So I'm really a believer that in that part of the business, blockchain will be very positively utilized.
Thank you. Your voting on the URL is now open again for the final time. Please cast your vote on how you see the future unfolding. Whilst the audience is voting, I will turn to some audience questions. So we have a lot of questions about fintechs. Menace or opportunity? I think this is addressed to you.
Sure. No, I'm happy to start, and I would absolutely would concur with some of the comments made earlier. Absolutely an opportunity. I mean, from a banking perspective, I mean, we partner with fintechs all the time, and I think it's absolutely the right thing to do. I think they're nimble, they're able to innovate quickly. I think the combining of the two, we've got the scale, we've got the clients. I think the coming of the two, and we're seeing it all already. I mean, we partner with fintechs all the time to deliver solutions. So I know that there's been so much talk over the past several years about it being, disruptors and so on and so forth. But I think we really are at a period where we see the collaboration and the need to work together to make sure that we deliver the right solution for our clients. So I think we need each other, and we operate in different spheres that allow us to be good at what we're good at. We're good at scale. We're good at complying with regulation. We're good at having a broad reach of the clients. And again, the fintechs bring that nimble innovation piece that's harder to do in a large organization such as ourselves.
Another popular question from the audience: can the incumbents truly transform when transformation requires reimagining the possible and willing to self-disrupt?
I can take
it.
Good. Because I think we're a perfect example. We started with the brick and mortar, 500 and over 500,000 retail locations. And like I said, we started our digital transaction 18 years ago, so we were the first to go online. Because you've got to be there, you've got to be with your customer as they have a journey that they're on. It's inevitable. Life changes. We all have to change, and we have to develop and continue to adapt. We've been around 165 years. If we couldn't constantly reinvent ourselves, we wouldn't be here anymore. But I don't think that's going to happen, because when you look at the group that I've got people all around APAC, and then my peers, we're around the globe. We know what's happening, at the brick and mortar stores. We know what's happening in the banking environments in all the countries that we operate in. So it's really just making sure you understand customer needs and behaviors. And as they change, you need to be adapting as well.
So there's a little bit of skepticism around partnering, which though fintechs and banks talk of partnering with each other, banks are heavily regulated and under the burden of legacy systems, which came up in the previous poll. Is this a partnership of equals? How are you finding the experience of partnering?
Well, I think most of the cases compliance is the same requirements, for fintech, business as well. Say, talking about our, wallet business, we actually have the license in every country. So let's say, in Hong Kong, we have the SVF license and subject to the regulation of Hong Kong MA. And say in UK, it's actually, the e-money license. So that's, I think it's, fintech, it's not something really new in the market. And regulators are actually putting up a lot of, say, regulations, related regulations to govern the fintech, business. So I think, it's similar environment, for compliance. Yeah.
But if I may, the real question is, we meet with a lot of fintech. They have many, many good ideas. They are probably in a better situation to be entrepreneurs, even if I have to say that over the last 2 years, I have seen a number of banks that are reinventing the way they work, the way they organize their ways of working, and therefore we see more and more intrapreneurs inside the banks. Okay, what is called forward-thinking people. Hopefully, we have that at home as well. But more importantly, each time I meet with a tech company, first of all, I listen, but it's important to see where they come from. But I think immediately as an industrial of banking, meaning that I look at the scalability of their solution, because their solution can be very, very good on one hand, but you cannot adapt and implement it into the real world. So maybe you can translate in my world, the real world, into a regulated world, but there are many, many solutions that are not adapted to the regulated banking world.
We have a little time, and wanted to talk maybe about the world of IT at Ant Financial.
Oh.
And we have seen developments like Smile to Pay and biometrics. How is Ant embracing the new technologies, and what's next coming out of China?
Okay. It's actually, I think we don't call ourselves like a fintech companies. We actually are technology companies. Actually, more than 60%, 60% of our populations are, engineers. So we have the basic technologies applied in our daily business. So namely B for blockchain, A for AI, S for security, I for IoT, and C for cloud. So Smile to Pay, technology was awarded one of the top 10 global, technology breakthrough in 2016 by MIT. But that's simply one application of the basic technologies. There are many other cases, actually. So say today, 99% of the insurance policy on our platform are actually processed by AI. So talking about the insurance, let's say average, account insurance is RMB 1.6, but guaranteeing up to RMB 1 million. So the ticket size is very small, but the volume is huge. And last year on Double 11, we processed 256,000 concurrent transactions per second.
It's the world record, wasn't it? Yeah.
Yes, indeed. So, and also, that we offer the, micro loan services to our, small business merchants, like 10 million of, small business merchants. So average ticket size is below, US dollar 1,600. And the whole loan process is actually automated. We call it 310. So 3 minutes limit approval and 1 second loan disbursements. And 0 is actually 0 manual interruption. So a lot of kind of cases, and blockchain, right? We apply blockchain to support our wallet to wallet, cross-border remittance, and that remittance can be processed in 3 seconds. So yeah, it's and also I mean. In terms of the number of blockchain patents applications in 2017, we actually were the number 1 in the world. Yeah, so a lot more to
something
come.
about that US-China balance of technology. Who's leading now in finance?
Yeah.
So we have the results. It looks like forward-thinking banks develop profitable value-add models. I'd like to ask all of our panelists to give me in 30 seconds their top prediction for the coming year in payments. I'll start with Philippe.
So, I mean, a couple of comments. The first one is, well, we are moving into cashless societies, particularly in emerging markets. It is evident that it will drive the payment volume up, probably more on the retail side than on the corporate side, but at least we see an increase in the volume of payment for sure. My second comment is that we have been discussing during that hour very much about the flows, meaning the payments, but we should have had a discussion about the stock, meaning liquidity and deposit. And I think the next evolution will not be on the payments, but will be on the way the stock is managed. And that will be very interesting evolution as well.
Jennifer.
Yeah, just a couple of observations. So I think, as we mentioned up front, the gig economy will continue to drive the higher volume, lower value type payments, and so we'll see the smaller transaction size. I think the business clients will continue to mimic the consumer clients, and so there will be more of a desire for those types of developments, in particular in the area of mobile. I think we'll see more and more desire to be able to do things on mobile for our business clients, an increased desire for data analytics off the back of that and access to that. But I don't think we can forget the desire for security. As we've talked about, fraud detection tools, and of course, regulation will continue to drive change.
Thank you. Thank you. Molly, do you want to?
I'm going to dispute Philippe just a little bit on his less cash, just because it was really interesting last year. RBC Capital put out a study that 85% of the globe still used cash 10 years ago. Wow. And at Money 2020, they announced that number had gone to 83%. So it's amazing that cash is still so prevalent globally. Of course, that's important for us as we bridge the retail and the digital. But as I look to the next 5 years, that could accelerate significantly with all the advancements that we're seeing. And like we talked about, the mobile phone, people have leapfrogged and gone right to mobile apps, and you've got that adoption. So that'll be really interesting to watch. But what's going to be important is really bridging the retail and bringing people along. Financial inclusion, as you think about the less cash, how do we do that? How do we bring our customers along and help them on that journey? So things like touching wallets, bringing them along as wallets are developed globally, and helping them make that transition. And in order to do that, not everybody can be good at everything. So it is going to be about collaboration and partnership.
Mm-hmm. Clara, we'll finish with you. How do you see the world changing in payments?
So we believe there will be, new use cases and also new experience from, mobile to smart devices, and more commercial adoption of the biometric, payments. So the journey to the new financial system is just at the beginning. Mm-hmm. So it's more like finishing, 100 meters at a, 10,000 meter run. Mm-hmm. So it actually needs, the contribution from all parties to, build a more transparent, inclusive, and reliable, financial ecosystem.
Yeah. Thank you. Thank you. Just remains for me to thank our panelists. If you can join me in thanking them for their insights.